drive or Brian and I can, whatever you prefer. And we'll start the recording now.
So, yeah, okay, why don't you start the recording? Welcome everybody to our meeting. I look forward to a fulsome discussion. Brian, I have no problems with you driving the meeting, and we'll call for votes as appropriate throughout the meeting. Let's just see if we can handle it expeditiously, because there's a lot on the agenda. So with that, I'll turn it over to you, Brian Farnan.
So we'll have a call to order. We've got Lonnie, we've got Matt, we've got our chair, Mr. Flynn. So we'll allow for any public comments. All right, hearing no public comments, move on to the next agenda item, which is approval of our meeting minutes from May 13th. Just wondering if we can have a motion to approve those minutes.
So moved.
Oh, second, Matt.
Thank you, Matt. Those in favor?
Aye.
Aye.
Those opposed? Abstained? Excellent. We can move on to the next slide. All right, so we're going to hand this one over to Jane, and she's got our outside accountant team here also to go through our annual comprehensive financial. This used to be called the CAFR. The name has changed. It's now the ACAFR. I think I mispronounced it now. I apologize, but I'll with that, I'll turn it over to Jane and team.
Yes, we have a draft of our annual comprehensive financial report. The ACFR and PKF O'Connor Davies is here to run through some items relating to that. And at this point, I'll turn it over to Catherine Patnaud.
Morning. Good morning. If you guys could, if the PK team could announce themselves and their titles, their positions on the phone, I'd greatly appreciate it. This is Tom Flynn asking.
Sure. Morning, this is Catherine Patnaud, and I'm the partner in charge of the Green Bank audit.
All right, good morning. I am Vinay Singh. I am the supervisor of the firm.
All right, so if you're all ready, I will go through our presentation of the ACFR, and I'll try to keep it brief, and then you can ask me any questions at any time or at the end of the presentation. So taking a look at our agenda, we'll just go through some 2025 highlights. On the ACFR, we'll provide our required communications to the board, and we'll also mention some future considerations on the new GASB standards. So the highlights for fiscal year 2025, this includes the provision for loan losses that increased $9.5 million. Program loans receivable decreased $12.7 million, primarily due to one borrower experiencing significant financial difficulties, which we'll look at a little further in the presentation. Restricted cash increased $98.5 million, as well as unearned revenue increasing $94.8 million, mostly due to the $94.6 million balance that's related to the frozen NCIF grant. GASB 101 on compensated absences was implemented this year. However, there was no significant change from last year, so there was no prior period adjustment necessary. There was also no federal single audit necessary since the federal expenditures were less than $750,000. And I will note that the threshold for next year is changing to $1 million, so to be determined if you'll need one next year. Some of the financial statement highlights. There was an unmodified opinion on the financial statements, so that's what you're always looking for, that clean opinion. Your total net position increased $14.1 million to $180.2 million as your revenues continued to exceed expenses. This included increase in interest income on promissory notes, energy system equipment sales, as well as revenues from the electric storage solutions program. Taking a look at your revenues, the operating revenue history, you had a small increase from 23 to 24. 24 to 25 increased $6.7 million up to $71.2 million. So taking a look at some of the details, that $6.7 million increase was primarily due to increase in energy system sales of $2.9 million, due to additional sales of commercial and municipal PPA projects. And there was also an increase in other revenues of $3.6 million, They're mostly due to the 1.9 million increase in the ESS program reimbursement of costs. The ESS incentive payments only increased about $1 million. So the lag between the incentive payments and the reimbursement from the utilities has been decreasing. So that's why the revenues are growing faster than the expense. Taking a look at your expense trends, the operating expense history increased 5.7 million from 23 to 24, and then 18.2 million from 24 to 25 up to 56.2 million. So this 18.2 million increase was due to the increase in energy system cost of goods sold of 2.9 million, also due to that increase in the provision for loan losses of 9.5 million, due to the reserves primarily related to that one borrower in financial difficulties. So that borrower's loan loss increased 16.7 million, which brought the loan loss reserve to 88% of that borrower's loans. This was partially offset by decreases in other loan loss reserves, primarily CPACE, due to the low write-off and delinquency experience. The rest of the increase was mainly in program administration costs of 3.3 million and in general and administrative costs of 1.7 million, mainly due to 2.2 million increase in pension and OPEB expense, which is going to fluctuate from year to year based on the state plan, as well as a 2.6 million increase in salaries and benefits due to an increased headcount. Taking a look at your net position trends, this has been increasing year over year due to net income. The current year change was unrestricted net income or unrestricted net position increased by 11.9 million to 100.3 million, primarily due to operating income of 15 million. And then that net position restricted for energy programs increased 4 million, primarily due to 2 million increase in assets restricted for maintaining loan loss reserves, as well as a 1.2 million increase in assets restricted by contractual obligations under the Green Liberty bonds. And now we'll take a look at some of the required communications with those charged with governance. So some of the things we're required to communicate are significant estimates, which include the net pension and OPEB liabilities, the allowance for uncollectible accounts or that loan loss reserve, as well as the asset retirement obligation. The disclosures are neutral, consistent, and clear. We'll be requesting management representations at the end of this audit. We are independent. There were no uncorrected misstatements and no material corrected misstatements. And really, we had no audit adjustments, just some management entries, and then a few reclassifications for financial statement presentation. So now we come to the future considerations. There's just 2 GASB standards out there. GASB 103 will be effective for fiscal 26. This one is on financial reporting model improvements. The 2 main items that will affect Green Bank are for proprietary funds, the statement defines non-operating revenues and expenses. So we'll be taking a look at this over the course of the year, and there may be some classification changes between operating and non-operating, but I'm not expecting any significant changes in your financials or any restatements. And the other change is this does enhance the MD&A, calling for a deeper year-over-year analysis, and it changes the sections a little bit. So we'll be taking a look at that going into fiscal 26. And the other new standard is GASB 104 on disclosure of certain capital assets, just requiring certain types of capital assets to be disclosed separately by major class in the capital asset note disclosures. So again, with this, I'm not really seeing any real change to Green Bank in those disclosures. And with that, I'm happy to answer any questions.
First of all, this is Tom. Before I turn it over to other board members, I'd like to thank you for your work and effort on the audit. Number one, to our external auditors, greatly appreciated. Glad to hear that there were no adjustments, no material misstatements, and I haven't heard yet, but I'm assuming there's no reportable control conditions. either. And so for that, all that work, Jane, I'd like to thank you and your team. Congratulations on another stellar audit. That's fantastic and gives us a good baseline to continue to operate the business. So thank you very much for all the hard efforts all around. And Jane, please, to the extent that your team's not on the phone, please extend our congratulations on that. It's not easy to get through these things so well. So congratulations.
Thank you for the praise, Tom.
Yeah. And now I'll turn it over to my fellow board members. I will have questions of myself, but I'll turn it over to the board members for their questions or comments. Abe?
I don't have any questions or comments. I echo Tom's compliments to the staff on this, every year. Thank you for keeping us on the straight and narrow.
I did, when it comes to the reserves, I noted, and obviously it's been a question came up late in the year. I noted the increase in the reserves for loan loss that you had mentioned, Catherine.
Mhm.
What's our total reserve balance now in that account so that I'm aware?
Total, let me just look.
And that's for either Jane or Catherine. Either of you can answer that.
The total for the program loans is 25.4 million is the total loan loss reserve.
Okay, and that one issue, do we have, that one item is specifically reserved for at this point? I guess I would say fully, is that correct?
I think Jane can speak more to the specifics, but the one of the loans I know is fully reserved.
Yeah.
Yeah, one of the loans is fully reserved. Another of the loans, there's an at-risk portion that we have reserved for. And one of the loans we have not reserved anything for because we fully expect to get the cash flows back from that one.
Right. Brian or Jane, I don't know if you want to comment about kind of lessons learned and next steps as to what you guys are doing moving forward.
Sure. Well, I think we're just going to we're continuing on with kind of like a comprehensive review, obviously trying to, Bert's team will involved also to, make sure that any kind of the lessons learned from Posigen and other kind of investments that we have. There's really few that I would say that are analogous to this, but just kind of buttoning up and reviewing through our processes, which we would be doing anyways.
And you're reporting back to this group as well as the board shortly, correct, on some of the actions that are being undertaken?
Yeah, and I think thanks for the question, Tom. Yeah, our financial sustainability obviously is really, really important because this is what allows us to continue to serve our mission. So, as we learn more and more and work through various investments and loans like we are, we're taking all those lessons learned as we look at the broader portfolio, right? Because those assets and the income coming from those assets is what's supporting us achieving our mission. So all of that is really, really important. I think what we're going to do, Tom, is in the quarterly reports that we send to the board on the kind of abridged financial statements is we're going to include a schedule in there on the loss reserves, kind of where things are, and we'll give a perspective in terms of how we're looking at those reserves in the context of where the risks might be. I think structurally, organizationally, as we mature as an organization, thinking more about the risk management function will be important as kind of the next iteration of our growth and development. So to be able to look at all of our investments with an eye towards preserving those assets because those assets are so integral to us achieving our mission. So yeah, we definitely have a few more things to be pursuing as we grow and as we learn from things like we're working through now.
Yep. Understood. To the auditors, now there was nothing reportable, and I understand what that is. There was nothing No adjustments noted. Is there any area that was of more concern than it was in prior years, or any areas that would require focus that aren't quite reportable? So they're not a quote unquote problem, but it's like,
Mhm.
be careful of this, be careful of that. Anything you want to bring to our attention as a committee?
No, there was nothing. Everything looks really good. The Green Bank team has been great to work with, and I think everything, controls included, look good.
Great. Madam Chairperson, do you have anything you'd like to ask or say?
Oh, here I am. Um, no, the only thing I'm interested in at some point is to hear from Bert about whether we've expanded our reach with the Green Liberty bonds and notes, because we evidently had a very robust response. And I just think that's sort of an interesting indicator, because I was reminding him, seeing last year that towns in Texas were buying our stuff. And I'm just sort of wondering, as everybody's looking for a well-run asset to invest in, if that gives us any interesting information.
Thank you, Chair Reed. Yeah, I'll comment on that briefly. We will have a report out at our board meeting on that. But the Green Liberty bonds, we had an issuance last week of just about $19 million in bonds, just shy of that. And we received orders in excess of 2.6 times. So it was strongly oversubscribed. And the yield on the bonds was inside of 5%. I think the average was about 4.6. But yes, it was strong demand across the United States. Our Green Liberty notes, as you mentioned, which is our 1-year note issued every quarter, every 90 days, continues to be demanded by many states, investors in many states. I think we're at about 40 or 41 at this point, which is pretty remarkable. So it's really good for us to be able to. I think it really attests to the strength of the Green Bank, the quality of its investments, the also, of course, the impact that we are having. Very importantly, that's why we exist. So it's really good to see that in the marketplace. So we'll have more on this at the board meeting on the 24th.
Thank you, Bert. Anything else? Seeing none, Mr. Farnan, I turn it back over to you.
All right, thank you, sir. So we go to the next slide, and then we're just going to have a resolution to recommend to the full board for approval of our draft annual comprehensive financial report for fiscal year 2025. We get a
So
motion in
moved.
a second. Perfect.
So moved.
Thanks, Tom.
Second, Matt.
Awesome. Those in favor say aye.
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 Those opposed? And any abstentions? Perfect. Okay, we'll go to the next slide, and thank you so much to our outside auditors for presenting and our continued relationship.
Thank you very much, team.
Now, this next agenda item was one that went to our deployment committee. This is one of those few items that we like to have on dual track. There's a kind of like, well, is it fully within the deployment bucket, or is it fully within or it should be in the ACG bucket? So in abundance of caution, we thought, let's bring it through both committees before bringing it to the full board. So this is regarding the staff approval requirements, and we can go to the next slide. And I believe Mackie is here to present on this.
Yes, thanks, Brian. Good morning, everyone. This is Mackie Dykes, the Executive Vice President of Financing Programs. I'm here to present a request to increase the aggregate staff approval authority from its current limit of 1 million to 2 million. Really going back to the beginning of the organization in 2013, and mirroring a similar policy that our predecessor organization had, the Clean Energy Fund, there has been authority in place for staff to approve projects of up to a certain amount, rather than bringing them to either deployment or the full board. Over time, I'm happy to get into the history, but just for brevity's sake, that authority has slowly expanded over time, and basically since 2017, we've had this framework of the staff could approve individual projects up to 500,000, with a total of $1 million. So that, for example, we could do two $500,000 projects. That was that authority was split into two buckets in 2024, one for financing programs and one for the energy storage solutions program. And it looks the same on both sides, up to 500,000 for individual projects and $1 million in aggregate. What I'm talking about here today is just the financing programs bucket. We have a robust process in place for these approvals. They go through the same internal process for prepping them that a project that's going to the board or deployment committee follows. The investment team does the exact same underwrite, and the same memo that you see for CPACE deals is prepared. And the same technical underwrite by our outside partner DNV is done. So it's exactly the same. And then the project is circulated to the appropriate officers and other staff for approval. And then we have a process managed by Eric to track the projects that have been approved, and make sure that we're staying within our approved authority. And then when we have projects that staff has approved at the next either board or deployment committee meeting.
I want you to go by grading.
Is there a question, Matt?
I want you to go by grading.
No, okay. We typically in the consent agenda, we prepare a memo that shows all the projects we've approved, and we quote unquote clear the queue to open up the authority for new projects. We've done this 53 times, that clearing the queue process, and 18 of those times there was not room for another full-size project, meaning we'd used over 500,000 of the aggregate authority. So that leads to, when that happens, that leads to delays in closing projects. So that's that sort of retroactive or historical reason, along with a prospective reason, which is right now we've got a large amount of projects, solar projects in our queue due to the recent changes in the ITC. We've got many borrowers who want to get their financing in place soon. So we've got dozens of projects under 500,000 that we're looking for timely approval. So, I mean, even without that sort of lump in our process, I think this would be a good change. I think the team has, going back to 2013, we've done a good job of managing this authority. And so I think the rationale for the increase to 2 million is there, but I think the timeliness is even more relevant now due to these large amount of solar projects that we have. So I will pause there for any questions or comments.
Mackie, this is Bert Hunter, Chief Investment Officer. I just want to make sure it's understood, and you did say it at the top to make it clear that the authority for staff to approve transactions up to 500,000 is those transactions that fall within an established program. So, and you're talking about financing programs specifically. I think we're really addressing CPACE here. But could you clarify whether this goes beyond CPACE transactions, or maybe that's a question for you and for Brian Farnham?
The only other sort of approved program framework that we have would be for our solar loan. So that we haven't done any solar loans, but if there are any of those under 500,000, we could use the staff authority for that. But historically, it's all been CPACE, and that would be the vast majority of projects that we're approving.
Remember, it has to be an approved program with established and approved program guidelines. That's why we're really talking about CPACE. You couldn't do a one-off project finance under this authorization, for example. Matt Ranelli?
Yeah, no, well, I saw this when it came through the deployment committee. I think its time has come. I know, Mackie, you've brought variations of this to us over the years, and we've been, I think, conservative and trying to keep good controls, board controls of oversight. But I think in light of the changes to the ITC in particular, and the comments that Brian and Bert were just making about how these are established programs that we as board members and the staff are intimately familiar with the underwriting for CPACE and solar loan. I think this is good forward thinking in light of what we know is going to be a sort of a hockey stick in the number of projects that are going to come through in a short period of time. So thanks for bringing it to us.
Thank you.
Any other questions?
It's Tom. I'm in agreement with Matt. I also think just actually the size of the organization and the size of what we're looking at, it's appropriate to adjust these limits at this point in time.
Well, with that comment from our ACG chair, I would ask for a motion to approve the resolution for this to go to our full board.
So moved, Matt.
Thank you.
And I will second it, Tom.
Thank you, Tom. Those approved, please say aye.
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 Those against? Abstentions? All right. Thank you. Thank you so much. We'll move on to the next agenda item. All right, this is the legislative process. We're going to have James DeSantis do a quick update. It's a kind of a quiet period right now, but James, if you want to just give us a little update.
Sure. Thanks, Brian. This is James DeSantis. I'm the legislative liaison for the Green Bank. This is just a very brief update in adherence with the legislative process document that we created in 2023. So currently we're at phase 1 of the process now, which is our pre-session, where I meet with all senior staff and their teams to determine if there's any proactive issues that the Green Bank would like to make and present before the 2026 legislative session. Currently, there are no issues to present to the ACG committee, but the process is underway. So if something does come up, it will be discussed. Also, out of our control is the executive branch agencies are all required to submit their proposed legislative proposals to the Office of Policy and Management and the governor's office by October 1st. They're still rolling in, but to this point, nothing will negatively impact the Green Bank or its mission in any way, which is a good sign thus far. Right now, there is you've probably been reading
Very positive view on life there, James. So we could
positive guy, Brian. Positive guy. And then Pura is chaos. I'm sure you've been reading this in the press, but it's the debate really right now is around what satisfies a quorum. OCC and a couple organizations believe that 2 will suffice. There's others on the other side that say they need 3. The governor is committed to installing a 3rd commissioner by October 10th, which is a self-imposed deadline, which is great because there's a lot of very important dockets that are before Pura that have final decisions coming out in December. So it's going to be very interesting to see what comes out of those decisions. The other thing is a special session that's tentatively planned for end of October, early November. That keeps going on and off and shifting dates depending on what happens on the federal level, but we'll update you as soon as that is solidified.
All right, perfect. Thank you so much. Thank you so much, James. Any questions?
This is Lonnie. I have one quick question. I heard the governor say that nobody wants that Pura appointment. Has that changed?
No, that has not changed. There have been a lot of no's, Lonnie. A lot of.
I bet. Oh no, I mean it feels like a totally dead end job if you do it right. It's really gonna upset people. It's crazy.
Lonnie, I heard you were up next.
Farted, you would be great. Just throwing it out there.
Thanks.
Yeah.
Thanks. I think that always one of these issues is that, the candidates will often step forward, but it's often the candidates that don't step forward are the ones that they probably really, really want. So they're really working hard to try to get the best possible people in there. And I think that's probably the struggle is, they're setting a really high bar for who they want to come in and take over.
In all seriousness, though, I think someone referred to it as the chaos, but when does whatever's happening within that organization start to affect our mission? When does it have negative consequences for the Green Bank? Do we have a view on that?
Well, the energy storage solutions program was probably the first one that kind of comes to mind that we often have active items in front of that. I think there's still a fair amount of time. I don't think there's, I think there's a fair amount of runway before this starts becoming like a pressing issue where things need to get improved. So I think in the near term, it's okay.
Okay.
Yeah, everything seems to be progressing now, but if by mid-December, if they're not three commissioners and not able to make final decisions on dockets, that will lead to uncertainty leading into January into the next session, which is not where we want to be.
Yeah, just keep us posted if you would. I'm sorry, I didn't mean to interrupt somebody. Go ahead.
Well, I would say, Tom, I'll take a slightly different view, although I know Brian and everyone are sort of saying the same thing. I would say actually now, but certainly if we get a new commissioner, but if, it's going to be hard to find someone with that skill set and, the gravitas and strength to stand up to, what are really entrenched forces over at Pura and pursue an agenda that is as forward-looking, I think. So I think we're, as a practical matter, yes, sure, December, but all of it really depends on who gets nominated.
That's a fair comment.
Yeah, and this is Mackie. I'll add, maybe somewhere between now and December. The ESS program was mentioned on the energy side. They do not regulate the efficiency program, so our lending business there won't be affected, but they do regulate the solar programs. And as you all know, we do a lot of that. And it's not a good time for uncertainty at the state on the state side for the solar policy framework, given everything that's happened on the federal level. There's a lot of discussion about if and how the state adjusts its programs to potentially fill the gap. And the sort of program framework we have now expires at the end of December. And typically in the next few weeks, we would be getting the draft decisions and final decisions about what the numbers will look like next year. So the later we get those, the harder it gets to start planning and putting the numbers and running the pricing on projects for next, because pretty much everything we're doing now, so the projects we're working on are for next year. So we need that certainty as soon as possible. So it certainly will lead to delays there.
Yeah, I think this warrants at least kind of your views to be brought up at the next board meeting. In my opinion, I'll defer to the chairwoman, but I think from what I'm hearing, this could impact operations. This could impact the mission. So, my view, just as the audit chair, would be that you should probably raise this and just discuss what possible implications are, in my opinion.
This is Lonnie. Just, and you think about it, as energy prices rise, and the argument that green energy is more expensive. What do you mean you're saving money? No, you're, blah, 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 with an election coming up next year. We really need to be very aware of what's going on and who gets blamed and public benefits and where's that going and blah, blah, blah. So it's a good thing that we got such a strong audit, showing that we're, we're making our own way and we're behaving in an incredibly remarkable way, particularly given the times that we're really doing well. The staff is doing so well, and but but be mindful and be aware that there's all this stuff going on, and there's people are going to be up for re-election, and all kinds of stuff happens.
Okay.
Right.
Anything else?
All right. Well, with that, we'll have Joe B, who's spending his last day on vacation with us. So thank you, Joseph, to talk to you about employee handbook revisions.
Thanks, Brian. Good morning, everyone. My name is Joe Buonanata. I'm Associate Director of Operations at the Green Bank. I support Eric Strago, who's our Vice President of Operations, and he's also on the line this morning. So this morning, we're bringing to the committee for consideration an edit to our employee handbook, specifically as it relates to our educational assistance policy. So by way of background, back in 2020, the Coronavirus Aid, Relief, and Economic Security Act, which is known more commonly as the CARES Act, created a provision allowing employers to make tax-free payments of up to $5,250 per calendar year towards employees' student loans. This provision took effect for calendar year 2021 and was originally intended to expire on December 31st of this year, 2025. In 2021, so with the recommendation of this committee and then ultimately the approval of the board, the Green Bank adjusted our educational assistance policy. Historically, we had only supported continuing education, but we adjusted the policy to include student loan reimbursements up to the 5,250. That policy then now for the last several years has allowed for a cumulative amount of $10,000 per employee per calendar year for student loans and continuing education. But earlier this year, the One Big Beautiful Bill Act made this tax exclusion for student loan reimbursements a permanent part of the tax code, meaning they removed the December 31st end date. They kept the provision at the 5,250, so $5,250 per calendar year, and but added in a requirement that that amount be inflation adjusted each year. So we are therefore seeking ACG committee approval to both remove the December 31st, 2025 end date in the student loan section of our handbook, add in the inflation adjustment requirement, so continuing our alignment with federal policy and maintaining the $10,000 cumulative cap for each employee. We added a note there that final bullet just flagging that educational assistance in the form of both student loan reimbursements and continuing education assistance has proven to be, through staff surveys and other conversations with staff, a really important employee benefit and both a tool for both development and employee retention. So just quickly before we open it up for questions, Eric and I wanted to flag that looking ahead, we are actively working with our internal team and our new external IT provider to update IT policies within the handbook, and we intend to bring those to this committee for consideration at the January 2026 meeting. So thank you all for the consideration and happy to take any questions if there are any.
I have a couple of questions, but I'll defer to my fellow committee members first. So, go ahead, Matt.
Yeah, thanks, Tom. I was just going to say, I think it's been a great benefit. I confess I didn't look in board effect. Is there any information on how many staff members have taken or availed themselves of the benefit and what the overall accounting is for us?
Yeah, sure. Good question. So to date, 25 Green Bank staff have taken advantage of the student loan reimbursement, and that ranges from folks using it just one time to all 5 years that it's been available. Total Green Bank spend has been just over $298,000.
And Joe, Matt, if I might, I've got a follow-up question.
No, thank you, Joe. Thanks, Tom.
Yeah. How many of those people have stayed with the Green Bank versus have left the Green Bank? Because at the end of the day, this is about employee retention. It's not about giving them, money to get an education and then leave and benefit somebody else.
Sure. Yeah. So 3 of the 25 that have taken that have received reimbursement are no longer with the Green Bank, but the other 22 are.
And how does that compare with kind of our general turnover rate? Do we know?
I don't have that number offhand, Eric. I don't know if it looks like you just came off mute.
I haven't run the turnover rate for like the past year, but that's so 3 out of 25. If my math holds, that's about a 12% turnover rate. That's about in line with that's 12% over like a 5-year period. So which is lower than our actual overall turnover rate, which last I ran it was running at about like 3%. So
It was running at what, 30%?
no, three.
3. So it's higher than our turnover
Well, no,
rate.
because it's 12, that's 12% split over 5 years. I was looking at 3% a year.
Okay, can we just do a quick analysis on that? I just wanted, the statement was made, and I understand it, that the reason to do this is employee retention. And I just want to make sure that it's having the desired effect on employee retention. You see what I mean?
Certainly.
I have no
I can-
problems keeping it, but I do want the follow-up item. In other words, I have no problem with the adjustments that are being made here, but if we're doing an educational assistance policy, I want to make sure that we, and therefore the taxpayers, are benefiting from it.
Absolutely. I'll follow up with you on that. I'll run that this afternoon.
Thank you, Eric.
And Tom, I agree. That's really good information to know. And Eric, maybe Rick, if there's any sort of trends in terms of which category of employees are, staying versus going, if you any trends you notice there or pattern, that might be helpful to have as part of the analysis as well. Like, for example, it's having the desired effect for some categories, but not for others. That way we can at least try to understand what's happening.
I agree with that. Yep.
Let us pull it together, and I'll let you know what stories it's telling. Sorry, Lonnie.
No, I was just thinking if you have any, any attractive little pieces of information. I mean, we want to protect their, their individuality and all that. But you just think some of these folks that have gotten this have done amazing things for the Green Bank. This one created this program, or this one saved us from that. Any little tidbits like that could be very helpful of the kind of quality that we're retaining.
Yep.
Certainly.
Okay.
Hey, Eric, on this, we can prepare it as a slide for our October 24th meeting. So don't just take the time to do the analysis, and we can present it there, because this is a recommendation from ACG to the board.
Certainly.
Perfect. And I just sent you one idea too, Eric, we could discuss offline how to address that.
Okay.
All right. Perfect.
Cool.
Next slide. All great feedback. All right. So I guess we would ask for a resolution with the additional instruction that at the board meeting, we'll bring that additional information that was requested by Tom Flynn. So can I get have a motion to approve this resolution for a recommendation to the full board with that caveat?
So moved.
Second,
All right.
Matt.
Perfect. Those in favor, say aye.
Aye.
Oppose? And abstentions. All right. Thank you so much. That recommendation will move forward to the full board. And then, so on an annual basis, we do a governance review of our bylaws, our operating procedures, ethics policy, and just going to report out that we didn't have any changes. Things that do often sometimes come up are, at what level do you want to require a competitive RFP? We have stayed flat at the $150,000 requirement. There's sometimes talk about, hey, is it time for us to raise that? Typically, we just like what we did with the staff approval, we also like to take a conservative approach. We're like, no, let's leave things where they are. Through that review, there were no other revisions. That was one of only 2 items that came up too. One was, sometimes with going to Lonnie with PSA approvals over 75,000. We were looking at the analysis. Are we paying her too much? Should that number be raised? I don't think we're there yet. Maybe next year, maybe the year where we potentially would want to increase that amount so that it's only the really large PSAs that would come to you, maybe at $150,000. But we're going to hold and not have any change to our governance reviews this year. And I'm also happy to report that all of our reporting requirements that we have to do all have been complete. These are our statutory filings that we do with James DeSantis, kind of takes the lead on, and those are all set. So with that, we can move to the next slide. And with the board membership, with our new first selectman down in Branford on board, we are in full membership. I'm happy to report that, and attendance has not been an issue. So things are, knock on wood, going well in that area. So
Great.
So the next agenda item, I believe, is a motion to adjourn. If you would like to entertain that.
Thank you so much. And again, thanks for a good quality meeting. Lots of topics covered. I enjoyed the conversation. I look forward to the follow-ups. And, I look forward to the next board meeting where we can discuss some of these items more fully with the full board. So thank you. And I'll make the motion to adjourn.
Excellent.
Second,
Those in favor?
second, Matt.
Thank you,
Aye.
Matt. Those
Aye.
opposed? Abstention? Thank you, everyone. Have a great rest of your day.
You too.
Thanks, everybody.